Hey guys, how's it going? Wanted to jump on here. I want to start sending everybody, all clients, monthly updates. Just keep you guys updated with what's going on in the market, what we're thinking at Sierra Ridge, what we're doing. Put some light into different headlines that you're seeing. Talk about some reactions that you might be having, and just look at everything from a bigger picture. And again, just keep you more updated with everything going on. So I know we still have a week left in this month. I'm actually headed out to Mexico for this weekend. Headed to one of my really, really good buddies' weddings, which this year has definitely been the year of weddings for me. I've been to 5 weddings over the last 2 months. It's been crazy, but really fun to be traveling over the weekends and to see a lot of friends that I haven't seen in a long time. But again, going to start sending this out on a monthly basis and just keeping you guys updated with what is going on in terms of market action. So I want to start here. I'm going to share my screen really quick. And I want to look at some charts really quickly. Okay, cool. So these are all the major indexes that kind of everybody follows. So crazy whipsaw action that we saw here. As you can see, every single index this morning when I woke up was very far in the red. And it was another one of those days you're just like, oh man, we're just getting beat up again. The crazy thing about this market right now too, a lot of times when the equity market's down, the bond market's rallying or the commodity market's rallying. And then vice versa. Equity market's doing well, bonds and commodities not so much. But right now, it's like everything just getting beat up at the same exact time. There's nowhere to hide. There's nowhere that's safe feeling. So it's just really, really nuts. It's a crazy thing. And it's kind of, not to say that anybody could have called it, but you could see some pullback potential when the Fed starts to do contractionary monetary policy and raise rates, and they're pumping the brakes on the economy a little bit, which is why we're sitting in more cash than normal in all accounts. But regardless, the market actually rebounded at the end of the day, which is crazy. I did not see that coming. And it rebounded really late in the session thanks to the NASDAQ here, which the NASDAQ is comprised of the tech companies. So tech is really what led the way today and led the charge for bringing back everything into green territory. So again, I think that this whipsaw action is going to continue. Luckily, heading into green territory strong like this at the late end of the day, I bet waking up tomorrow, Tuesday morning, the 26th, will probably continue to go higher, at least for a little bit. Who knows over this next week? I mean, geez, Louise, things change so quickly. But I wouldn't be shocked to see some more momentum heading into the morning of the 26th tomorrow. But that's what the day chart looks like. I want to look at everything from a little bit of a bigger perspective here. So we'll look at some more charts. Okay, so let's look at everything over the last month, and things do not look good. I mean, some crazy down numbers for only a month period. So the red line here is the Dow Jones. It's down a little over 2% over the last month. Blue line here is the S&P 500. It is down about 5% over the last month. And the NASDAQ green line here down 8.5% just over the last month. I mean, absolutely getting beat up. Year to date, let's look here. Dow Jones is down 6.5%. Blue line, S&P is down almost 10%, 9.8%. And the NASDAQ is down 17%, which not surprising. That's the biggest lagger. Tech companies, they're very speculative. A lot of them don't really have great balance sheets yet. They're being evaluated on what they're going to be doing in the future. They don't have any tangible products currently for some of those companies. So that's why they're getting beat up even more, which again, not shocking. As interest rates rise, those sorts of speculative companies are the ones that are going to get hit the hardest. So that's kind of why you see the NASDAQ lagging the most there. And again, this is not a fun chart to look at. It's pretty scary. Looks horrible. Everything getting beat up, all different sectors of the market. And that can kind of get people to feeling like, oh man, I should have taken all my money and just hid it under my mattress this year and just got it all in cash. And yeah, of course, hindsight's 2020, but if you play that game over the long run, you're going to lose a lot of the time and you're not going to do very well in your portfolio. But again, when things are going poorly, people come out of the woodworks and say, I knew this was going to happen. I knew I should have sold and sit in cash. I knew that there was going to be a bear market coming. There's going to be a recession after this. It's just only going to get worse. And people really fixate on the negative. But in my mind, you have to be pretty pessimistic to not believe in the long-term growth of U.S. capitalism and of the U.S. economy. So looking at it again from the last year to date, yeah, doesn't look great. But I know that a lot of you have not been invested for just the last 4 months. So let's look at something from a little bit longer perspective here. Let's look over the last 5 years and see what things look like. Well, not surprising, I'm sure, as you all would already know, Dow Jones here up 63, almost 64% over the last 5 years. S&P's up over 80, and the Nasdaq's up over 117%. Obviously, over the last 5 years, we've seen a major boom in tech. But you just change the picture that quickly. And 5 years is not even a long time frame. I mean, a lot of people are invested for 30, 40, 50, 60 years. A 5-year time frame is not even a long time. So yes, it's a little scary out there right now. Yes, there's a lot of red going on and people are getting beat up. But if you look at what your portfolio has done over the last 5, 10, 15 years, this little blip is absolutely nothing and nothing to panic about. The only people that get hurt on the roller coaster ride are the ones that jump off. So we got to keep that long-term approach in mind. Yes, we're making some moves, like I said, sitting in a little bit more cash, making small incremental sector changes, which we can talk more about on a one-on-one basis if people have questions. But I do not believe in trying to time, what's going to happen with the Ukraine war over the next month, or what's going to happen with coronavirus in China over the next 6 months. Let's make a trade on that. That's more just short-term betting, which I don't believe in. I believe in being more long-term diversified and betting on the growth of U.S. capitalism. So just wanted to share that with you again and broaden the lens a little bit to looking at everything so that the headlines don't sound quite so scary. Because, looking back, probably even 2 years from now, you're going to say, man, I wish I bought more right there, or I'm very, very glad that I at least didn't sell. Now, when you look 5 to 7 years, absolutely. We never have not recovered from anything in history. So again, I just want to keep that perspective in mind. And there's actually one more thing I want to share with you guys really quick. I'm going to share another portion of my screen here, getting pretty handy with this Zoom stuff. But I did a video about this on Facebook, actually, and I wanted to share this with you guys. It's the 30 reasons why you should not invest in the stock market. And it's actually really crazy to look back on. I mean, sure, we have the 9/11 attacks. We have the war in Iraq in 2003, the stock market collapse in 2009, financial crisis in 2008, COVID. We have the oil prices in 2014. I mean, you can just think of all these reasons why, oh, Hunter, I didn't want to invest because of X, and I shouldn't invest right now because we have Fed tapering and interest rates rising and coronavirus and the Ukraine war. Well, look at all the things that we've already been through. The problem is there's always going to be another thing. There's always going to be another reason why you should invest. There's always going to be something to scare you and something that they can make in the headlines to make you worried. But throughout history, since the beginning of the stock market, if you have been long-term diversified, you've stayed patient and you've stayed the course, you have always been rewarded. So that's just something, again, I really, really like this illustration because it is weird to think about. I mean, we look so short-term that we forget what happened literally just a couple of years ago. I mean, I remember when everybody was talking about Brexit and Trump being elected and people thought that, the market was going to absolutely tank off that news, and then look what happened. So moral of the story is, again, I will always be long-term bullish. I'm always going to want to keep that long-term diversification approach with everybody's portfolio. Now, as you get closer and closer to your goals, obviously we want to lower the risk tolerance a little bit, but I don't believe that it's a time to panic. I don't believe it's a time to make any crazy changes. I believe that you will still and always will be rewarded for being long-term diversified and patient. So that's what I got for you guys today. Again, I want to start sending these out monthly, just quick little update of what's going on. If we have any major changes to portfolios, I'll keep you guys updated on that as well. But like I said, it's almost time for semi-annual reviews too. So I'm going to be reaching out to everybody individually, probably in a couple of weeks to a month, to start scheduling those and come out and see you guys face to face and get to catch up with everybody. So really appreciate it. Again, hope that you're doing well. And if you have any individual questions, you know where to find me. Please don't ever hesitate to reach out. All right, guys, talk to you later. Thanks. Bye.